This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
Drumz PLC is an investing company focused on building value in technology, and has conditionally agreed to acquire Acuity Risk Management Limited, a supplier of governance, risk, compliance software and services. Now, Drumz already owns 25% of the issued share capital of Acuity and is proposing to acquire the balance of the issued share capital and to be issued share capital for a total consideration of approximately £3.6 million. Now, the consideration will be satisfied by the payment of £0.5 million in cash and the issue of 45.7 million new shares. A conditional placing and subscription to raise 1.45 million will be completed by the issue of 32.2 million new ordinary shares at a price of 4.5 pence. And a meeting will be held on the 24th of April to approve this transaction. Well, here to tell us more and a bit more about the company and the opportunity is the CEO, Angus Forrest. So thank you very much for joining us today. Angus, how are you doing?
Well, we are very excited by this transaction. It is the end of 2.5 years, really hard work, working with Acuity. The idea behind Drumz is that there are lots of software companies out there which have got fantastic software run by really clever people, and there is a great opportunity, possibly a global opportunity, which they have not been able to exploit. And what we are doing is coming along with appropriate expertise, and we are taking measures to improve their exploitation of the opportunity. So, for instance, the typical things we would seek to improve would be the contract terms, maybe 3-year contracts rather than 1-year contracts. Pricing might change, that might be slightly higher. It'll almost certainly be on SAS methods of charging, because the opportunities for value enhancement is much better with SAS rather than perpetual licenses. We will look at marketing. Marketing's changed dramatically in 10 years, and some of these companies are still using techniques which would have been in vogue 10 years ago, but now there's massive change and massive improvement. Sales focus is the second from the last one, and then recruitment. People prefer to join a quoted company rather than a small private company. And the idea is to transform the value of the business in a 3 to 5 year period.
Okay, so Acuity is a well-established business, but this transaction here with Drumz here and getting on to the markets has been, you said, a 2.5 year sort of process, so a fairly long journey to get there. Could you just explain a bit more perhaps about the product and what exactly it does, how it works, and this idea of SaaS, this software as a service model?
Okay, so Acuity has one leading product. It's called Stream, and it is a award-winning software platform for managing risk, to enable organizations to manage risk. All of the organizations will already be collecting data about risks they perceive, whether that be about sort of cybersecurity, which is one of the main areas that people use Stream for, or other enterprise risks, vendor management risk, and a whole range of other risks. And what Stream does is it takes the data which has been collected, it analyzes the data and produces reports to improve decision-making, management and governance. So there are two drivers to Stream. One is risk management and compliance with legal provisions, accounting requirements, and stock exchange requirements. And secondly, it is to improve the quality of the business, because if you've got very up-to-date information and it's been properly analysed, which is the strength of the Stream product, you can get you can become more competitive with your competitors. So it's not only defending you against risks and managing risks, but it's also giving you opportunities to excel against the competitors.
Okay. Could you explain a little bit more about the market opportunity, the market size in risk management? You know, what are we talking here? And also, specifically with Stream, how does that compare with the competitors? What gives you the edge?
Okay, so the market for GRC is large. It's Markets and Markets, which is a commentator and analyst organisation, values it at 2022 at $14.9 billion a year. And they estimate it's going to grow to $27 billion by 2027. It's very odd to have large markets which are growing at that sort of pace. And this is such a market. And one of the reasons that we are particularly attracted to the Acuity company and its products, where we see fantastic opportunity. There are considerable number of competitors. There are 3 or 4 which are the market leaders, but most of those have got product that is older than Stream and is less flexible. The great advantages of Stream are its flexibility, its ease of deployment, and the speed of deployment. So if you're trying to manage a risk like cybersecurity, you really want the solution there today, not tomorrow or in 2 years' time. And Stream can be deployed easily in 4 to 6 weeks. Some of our competitors have got a different way of measuring the risk, but the time to deployment and the cost of deployment is much higher. It's 12 months or maybe more. And we have had customers come to Acuity, they bought Stream, their intention was to move to a different product produced by one of the majors, and they've just stuck with Stream because it's satisfied them so well. Okay. And our great thing is that customers and others like us. So Gartner, which is a very important commentator on software, we are in the top 4 of Gartner's user surveys, and we're quite well respected in their other work on GRC, and we are top at G2.com, which is another commentator.
Okay. So speed of deployment and very good usability are your sort of key selling points there for the software. Are you able to give people an idea of some of the aspects that this software will be deployed? So some ideas of what risk management companies would want to address. And also, I don't know if you're able to talk about potential customers, potential clients who you'd be targeting.
Yes. Okay. So what risks? The risks are almost everyone uses it for cybersecurity and IT risks. They can also use it, or it's often used for enterprise risks and for vendor management, I've suggested before. But some of our customers use it for actual physical security of sites. The BBC being an example of a company that uses it for physical security of sites. And there we started with one installation. We've moved to 3 teams. We sell to governments. So British government have got it in various organizations. And the UN, we started in 2010 with a small Spanish-based UN organization, and now we're in 5 UN agencies. So we're able to grow. And then other companies which would be common names, the NHS, London Ambulance Service. We have got about 10 customers in the States, leading credit union, a bank in the Midwest, and we have quite a following in Germany.
Okay, so we're talking some big names there, some big organisations going into government level, really. So that's pretty significant, Angus. You mentioned North America there, and I noticed in a recent news release from the company that you really want to try and crack that market. Are you able to tell me a little bit more about the business plan? Now you're on the market, you've got access to the capital required to grow this business and take it forward. So what really do you want to achieve? What's the strategy and the plan for growth here?
Well, firstly, one of the advantages of Acuity being wholly owned by Drumz is it will be perceived as a PLC. And as you've pointed out, all our customers are big organizations. We are more like them than they were before, which gives a better profile. Secondly, we have begun to actively recruit and manage partners. We have had 1 or 2 very high-profile partners, CGI, which is a large Canadian business. I think market cap is 40 billion or something. PA Consultants, and we've got a range of others, including we've appointed a reseller in Florida, and we have 2 specialist organizations in the States. One is called MasterCard Risk Recon, which is part of MasterCard, and the other is called Security Scorecard. Both of those specialize in security. They, by our standards, are large, and they give us access to a whole range of their existing customers. They've chosen us because they think we've got a decent product. We would not be the only product they'd sell, but we'd be the product of choice for particular users. And we have 1 or 2 customers who are who provide validity because of who they are. So we have some defense and cybersecurity contacts where they use our product for cybersecurity. And that really helps when you go to somebody else who's never heard of you to talk about a sale. They think, well, they can't be complete numpties. They've got to know what they're doing, otherwise they wouldn't have sold to XYZ.
Sure. I mean, it sounds like you're fairly well established as a business there with clients. What's the revenue kind of plan, to grow the revenue, to get the customer base? Is it going to be a subscription-based model? Do you have certain targets that you'd like to achieve, milestones?
We will sell on a SAS model. We're selling 3-year contracts, payable annually in advance, so that's good for cash flow. The gross margin is 92% or thereabouts. So, like many software companies, that's particularly strong feature. We have been going for 15 years, and the management, who we get on well with, they absolutely believe in the opportunity. They are taking most of the consideration by way of shares, and they are remaining working for the business. So they can see that with our help and expertise, we can grow this business very substantially over the sort of 3 to 5 year timescale.
Okay, so that's what you're looking for. Now, I guess as well, you'll be getting on the market in approximately a month's time, maybe a little bit longer, but you would hope to get some news out to shareholders and investors quite quickly, would you, in terms of contract wins and revenue numbers, that kind of thing?
We would hope to get. We've got a lot of contracts in negotiation, and I tend to think about quarters because we tend to secure contracts in the last month of the quarter. Can't really tell you why, but that's traditionally what's happened. So we would expect to produce quite a lot of news, some of it very exciting. We've got some large contracts by our standards out there, which we're negotiating, and we've got quite a lot of new logos, i.e. new customer wins. So the ideal is to win new customers, but also we've got upsell within customers as a way of growing the revenues. And we've got revenues of about 2 million. I think it's realistic to see that we can get to 50% increase of that in the next year, and potentially get to 10 million in 2 to 3 years. And that would give a fantastic return for shareholders because on SaaS businesses, they are valued by a combination of growth rate and scale. And as you grow, so the multiplier goes up. So at 2 million, we're valued at maybe somewhere between 4 and 6 if we sold it. If we can get to 10 million, we'll be valued at 60 million, maybe better, because the growth rate will be so high.
Okay, fantastic. Well, thank you very much for your time today, Angus Forrest, the CEO of Drumz PLC.
Thank you, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.